Hi, this is Daniel DiTuro. Do you have enough saved to cover emergency and unexpected expenses? In this video, I'll share why have an emergency fund, how much should you save, living beyond your means, and money-saving tips. Many people believe the only reason for having an emergency fund is to pay for unexpected expenses. But not having an emergency fund can cause more than temporary grief or suffering. Without an emergency fund, you can lose your car or home, ruin your credit rating, pay higher interest rates for years, pay higher insurance premiums for years, and be denied credit, auto, and home loans. Many Americans can't pay for major auto and home repairs, prescription drugs, funeral expenses, end-of-life expenses, or to replace major appliances. Television ads encourage buying extended car and truck warranties, extended home repair warranties, and major appliance repair or replacement warranties, getting discounted prescription drug cards, and expensive whole life insurance to cover end-of-life and funeral expenses. Then there are auto title and payday loans with fees and interest that can exceed 400% annually. A better alternative is saving to pay for emergency expenses. The size of your emergency fund depends on your situation. Some things to consider include: are you in good health or poor health? Do you rent or own a home? Do you have an auto loan? Do you have credit card or student loan debt? Do you have health insurance? And do you have homeowners or renters insurance? For people working full-time, losing their job can mean the loss of medical, dental, vision, and life insurance in addition to weekly income. Most part-time jobs provide no health insurance, paid sick or family leave, or paid vacation. The general rule is having enough money in savings or checking account to pay for 3 to 12 months of essential living expenses. Without sufficient savings, one major emergency expense can wipe out a person's savings. But how can you save if you're living from paycheck to paycheck? The first question is, why are you living paycheck to paycheck? One reason is encouraging people to use credit to buy what they want now and pay for it later. Why spend $1,000 you don't have for goods and services when you can put it on a credit card and pay about $25 a month? In just a few years, the U.S. went from a cash-based economy to a credit-based economy. Some people have 5 or more credit cards with large outstanding balances. U.S. consumers are carrying $1 trillion in consumer loan debt, $3 trillion in auto and student loan debt, and $10 trillion in home mortgage debt. Eliminate credit cards, and the U.S. economy would go into a recession or depression. Instead of teaching people how to live within their means, they're encouraged to borrow and spend. When you use a credit card, a company loans you the money to pay for a product or service. With cash, you have no monthly payments, no interest, no late fees, and no bill collectors. Living paycheck to paycheck is not limited to people working low-wage jobs. People earning $200,000 a year or more do the same. Rule number 1 is no one becomes wealthy spending all or more than they make. And rule number 2, the well-off use debt to make money, not lose money. There are 2 types of living expenses: essential and non-essential. Essential expenses include food, housing, clothing, utilities, transportation, insurance, education, and taxes. Non-essential expenses or luxuries include things like movies, dining out, concerts, jewelry, streaming services, and sporting events. Non-essential expenses are things you want but don't need, like $200 designer jeans and $300 designer boots. Non-essential expenses should be paid using disposable income you have saved, not charged to a credit card because you have no disposable income. Disposable income is money left over after paying essential expenses. Disposable income can be used to buy non-essential items, pay for vacations, and for emergency and retirement savings. Paying on credit is convenient, but you can easily build up more debt than you can afford to pay off. Many people with $10,000 or more in credit card debt can't pay off the debt, and it can take years to pay it off. For example, it takes 7 years to pay off $2,000, making the minimum monthly payment. And you'll pay over $1,000 in interest. Increasing the monthly payment pays off the debt in 3 years and saves $665 in interest. According to the Federal Reserve, the average credit card interest rate is 16%. Maximum interest is 29.99%. People with poor credit scores pay higher credit card, auto loan, and mortgage interest rates. You're losing money paying 16% interest for a cup of coffee. And paying $3 for a cup of coffee is fine if you can afford it, but many people can't. A cup of homemade coffee can cost less than 10 cents. Substituting homemade versus prepared coffee can save you hundreds of dollars a year. One way to find out how your money is being spent is by tracking your income and expenses. You can use a notebook or computer spreadsheet. Food is a major essential expense. In my video, Healthy Eating for $5 a Day, I shared how you can save thousands a year replacing prepared foods with homemade foods. I've already shared how you can save hundreds of dollars on just one beverage. Many people spend $1 or more daily on filtered bottled water. For pennies a day, you can filter and drink municipal water. Annual savings, about $300 per person. One fast food meal can cost $10 or more. An equivalent restaurant meal, twice that amount. With home cooking, you can eat steak for less than the price of a hamburger. In the U.S., 40% of the food produced is wasted. And yet, millions of Americans live with food insecurity. Some people believe use-by or best-by dates are discard dates. In reality, use-by dates are a manufacturer's estimate for optimum flavor and texture. Many people refuse to eat leftovers, but they'll eat frozen prepared meals. Buying foods in bulk can save you hundreds of dollars a year. You can save 50% or more buying bulk herbs and spices. For frequently used herbs and spices, buy bulk and refill your bottle or jar. Glass and plastic bottles and jars will last for years. Another option is growing pesticide-free organic herbs for a fraction of the cost of store-bought herbs. Perennials like rosemary are also ornamental, needing very little water or maintenance. Annuals like basil and parsley can be dried for use throughout the year. The largest essential expense is usually housing. For decades, people have been told home ownership is better than renting or leasing. That may be true for some homeowners and real estate investors, but not for everyone. When you rent or lease, you have your monthly payment, possibly utilities, renter's insurance, and exterior maintenance in some cases. With home ownership, you may have a mortgage, utilities, homeowner's insurance, property taxes, and maintenance and repair. Maintenance and repair costs can be thousands of dollars a year, especially with older homes. Buying a house for $300,000 and selling it for $400,000 doesn't mean you made $100,000. Subtracting mortgage interest and maintenance and repair can reduce the net gain to $40,000. Subtract selling and closing costs, and you may have little or nothing left. Home and appliance repair warranties are only cost-effective for major repairs. Landscape irrigation systems are usually not covered. Most charge a service fee per call. It can cost $60 to replace a $5 toilet flapper, and that assumes the part is covered by your warranty. It may not be covered due to normal wear and tear. And can you afford to lose 4 or more hours for the repair person to arrive and make the repair? The same with replacing an outlet or switch. It may or may not be covered. Maintaining your yard not only saves you money, it also burns calories and maintains muscle. Why pay an exterminating company $50 a month when you can apply the same chemicals as needed for about $50 a year? For most people, the cost of owning a car or truck is second only to housing costs. If you use public transportation or taxis, your only cost is the fare. When you own, you may have an auto loan, insurance, license fees, registration fees, maintenance, and fuel. Buying a new car using an auto loan is a bad investment. Unlike buying a home, you're paying interest on a depreciating asset. By the time you pay off your 4 to 5 year auto loan, your vehicle can be worth half its original price. In most cases, you can save thousands buying a 1 to 5 year old low-mileage used vehicle. When buying a used vehicle, you have less to finance, can lower your insurance premiums, lower registration and licensing fees, and may still be under warranty. There are many more ways to save money regardless of your income. Today, money problems is one of the leading causes of anxiety, stress, depression, and divorce. The takeaway from this video is to live within your means and make a habit of saving money so you're prepared for unexpected expenses. Please leave a comment if you have any questions about this video. Thank you for watching.